Another sequence and another guest in this web TV of the Africa CEO Forum. Let's talk about the building a resilient African financial system. It's a great pleasure to receive here the CEO of TCX. Welcome to the Africa CEO Forum.
Thank you.
Mr. BROUWER Ruurd.
Parfait.
Do I do it right?
Yes,
Perfect. First question for you, I would like to know, how does the TCX fund support projects on the continent, and what is the area does it cover?
That's a good question. So I think the best way to answer it is if I start with why we exist. The thing is, there's a lot of investments coming from the multilateral development banks, bilateral development banks, and they all share the same problem because they have a balance sheet in euro, dollars, British pounds, whatever, and they finance their clients in Africa, but they don't want the currency risk. So what they do, they give a dollar loan to a bank in, I don't know, Lagos, Nairobi, Kinshasa, and they say, you give me dollars back, and the risk that the naira or the shilling or the kwacha depreciates, you handle it. I don't know how to do that, you handle it.
It's not fair.
It's terrible. It's terrible. Lesson one for every decent banker is you design a financial product that fits the needs of your client. In this case, the clients earn kwacha, shilling, or naira, or franc CFA, and yet this rule number one, that they get a loan in either kwacha, shilling, or franc CFA, is not followed. Now the good thing is, going back to where I was, why does TCX exist? All the multilaterals and bilaterals know they shouldn't offload the currency risk because their clients cannot handle it. So they set up a fund called TCX, the Currency Exchange Fund, allowing them to actually pay a dollar loan, but then turn it into a local currency loan, removing the currency risk from the borrower, which can be an African corporate or an energy plant or a microfinance institution. So they no longer have to manage the currency risk. Instead, they put it all in TCX, a fund in Amsterdam. And as we are now exposed to over 60 currencies globally, so Africa, Asia, Latin America, whenever there's a problem with the naira, the Costa Rica colon is pretty okay, or when there's a problem with the Azerbaijan manat, then suddenly the franc CFA is stable. So because we can actually diversify on a global basis, we can take those risks that other parties cannot take. So that's our purpose.
It's quite clear, and you cover all this area, meaning Africa, South America too, see it?
Yeah, Latin America.
Latin America.
Asia and Central Asia as well, yeah.
Okay, I would like to say you like unique in your system.
Yeah, no, we are absolutely unique because we start where all the commercial banks stop. So if you go to Ecobank or Axis Bank, they can give you FX risk mitigation for 6 months, 12 months, sometimes a year and a half, but then they stop.
Okay.
We start at 2 years and we go up to 30 years.
Wow. Wow.
Yep.
Can you tell us more about the importance of foreign exchange market on debt sustainability and climate financing? And how can we tackle it strictly in order to build a resilient growth and capital markets?
Yeah, that's a good one, and it's very actual in today's situation. So if you look at Zambia, Mali, Sierra Leone, Ghana, they're all in huge problems in terms of debt sustainability, not because they were mismanaging the country, but the tipping point was the fact that the dollar increased compared to all other currencies in Africa, well actually globally. At the same time, the interest rates increase. So what's happening, because these countries, they have, so on a sovereign basis, they have about 60–70% of their borrowing comes from outside, and of that, by far the largest part coming from World Bank, African Development Bank, IMF, it's all hard currency. So the moment when there is a problem, the currencies get hit, which means that in local currency the debt increases tremendously. And that means actually that for these currencies, and I think for all emerging market currency, when we talk about debt sustainability, so these are my shareholders, I have to be nice to them. But in terms of debt sustainability, as long as the multilateral development banks keep on offloading the currency risk to their borrowers, there will never be debt sustainability. Because for debt sustainability to exist, the borrower must be able to predict the debt service. And today, Ghana, Sierra Leone, nobody knows what debt they have to pay next month, let alone 5 years from today. So I believe aiming for debt sustainability can only be done if you take away the currency risk from the borrower. And then I'll link it to your climate finance question.
Yes, exactly.
No, we've had also with officials in Sri Lanka that's in default, in Zambia. So the moment a government is in default, close to default, so you have all these yes. IMF levels. The moment they are close to default, they're looking at refinancing risks, downgrade risks. They will not borrow dollars to invest in climate finance or in green energy. They need to first resolve the crisis and only then can move to long-term structural change in the way they energize their economies. So for us, debt sustainability and climate finance are interlinked. You cannot solve the one without solving the other. And in terms of timing, you first need to resolve the debt crisis, because a country that is unsustainable debts will not borrow more to invest in renewable energy.
It's crazy how it's clear and it's like obvious, but the risk is still here, and that's why I say you are unique in a sense. And how come there are no more institution or organization like you to help? Because you need support, I imagine, to reach
yes.
your goal.
And I wish I understood, because like at the start of our conversation, I said rule number 1 in responsible banking, you create a financial product tailored to the needs of your client. And those parties that are focused on financing the economies of, let's say, the most fragile states, do not apply rule number 1. So, yes, we are unique, and sometimes that's nice, but given the size of the problem and the size of the challenge in terms of currency risk, I wish there were 10 more like us, at least.
Wow.
Yeah. Yeah.
Wow. How is the TCX different from the other available investment funds?
Oh, we touched upon it already.
Yeah, but we can
emphasize. No.
Yes.
So let me show another angle, because so we take risks in the fund that nobody else can handle. And that means that we're sitting on this pool of risks, and over the last couple of years we've been growing quite fast. Now, if a financial institution grows, there's 2 options. You either increase your capital base, so we're doing that, but that has limitations, so you can't do it too fast, etc. The other way is to get rid of the risk that the capital base is supporting. So our team started looking for parties that might be willing to buy the risk of 5-year franc CFA or 5-year Sierra Leone or kwachas or shillings. And what we have learned, there is a very significant market out there of Western pension funds, impact investors, that are really eager to buy the risk of, let's say, 5-year Sierra Leone.
Okay.
They want the market risk, so they want the currency and the interest rate that comes with it, but they don't dare to touch credit risk in Sierra Leone or in Zambia, or they're just not used to it yet. So what we've done with our AAA rated investors, we've asked, for example, FMO in the Netherlands, please issue Sierra Leone bond for us. That's exactly what they did. It becomes a bit technical now. So we swap them back to dollars, so they have a normal dollar funding. But the swap we give to them is the opposite of the one we have to support foreign investors in Sierra Leone. So on a net base, we're back to 0. we can do more de-risking in Sierra Leone or Zambia. And the investor, let's say a European pension fund, he gets 5-year Sierra Leone risk at 12%, but with a AAA credit risk. Now, over the last couple of years, we've done 200 of these bonds. So we've generated what we call the Frontier Currency Index, showing to the outside world that maybe they're not yet interested to invest in a bond from a bank in Kenya or from the government of Tanzania, but they are interested to take the risk and the return of the shilling. And what we've done in other countries, so for example, Georgia and Uzbekistan. So Uzbekistan, we did 15 of these bonds. And based on that, a market emerged. And the government of Uzbekistan itself was able to issue in their own currency, the Uzbek som, in the international capital markets. Meaning, so I know it's technical, but I hope
we follow you.
You still look very
I try
clear.
to follow you. It's technical for sure because it's finance, but please go ahead and we're sure people around this web TV could be interested.
And you have an educated audience. So
absolutely, that's why.
So ultimately, the government of Uzbekistan could issue in the international capital markets in their own currency. Now, what our ambition is to do exactly the same, for example, with Kenya, Tanzania, hopefully over time, Nigeria, France CFA, that we prepare the international capital markets with AAA rated Tanzania shilling paper. And by the time they've gotten used to it, we pull out and they might be willing to invest in the top paper of local banks or the government. Meaning that the economic actors in these countries, they have access to their own capital markets, but also in their own currency to the international capital market.
Okay.
And we believe over time that will be the game changer in terms of FX risk management. Yeah.
Quite technical, but
sorry.
Quite clear. We are here.
Difficult problems sometimes have difficult solutions.
Sure. We are in this context of poly crisis.
Yeah.
And TCX's mission was to help businesses and households on the continent cope with the pandemic. What the lesson do you keep from this sanitary crisis and to be better prepared for the future economic disruption?
Yeah. So the COVID crisis was really bad, but if we look at it from the perspective of macroeconomy, so the way we looked at COVID, it was just another crisis. Whether it is COVID, whether it's an invasion of Ukraine, whether it's a global financial crisis or a euro crisis, it's always the same dynamics. Investors pull out of emerging and frontier markets, the currencies drop. What happens next is that debt service becomes more expensive in local currencies, meaning that emerging market countries, depending on, let's say, where they are in the cycle, are more challenged to repay their debt. And the moment that happens, either they get a downgrade or they need to increase interest rates. In any case, so that's what we call the pro-cyclicality of hard currency lending. In other words, the dollar debt doom loop. An international crisis, regardless of its origin, hits emerging markets most because of the currency risk. Now, COVID was not different. And when it happens, and that's of course the worst of this economic dynamics, the poorest are always hit the hardest. So they lack the reserves, they do not have the diversification, meaning that most importantly, specifically in the world of development finance, it is the poorest that need to be protected against currency risk the most. Preferably by the actors of development finance. But in a nutshell, getting back to your question, what have we learned from COVID? It's just another financial crisis, aside all the health issues and the terrible things that happened. It's just another financial crisis. Frontier markets get hit hardest. The problem that they are hit with is based in currency risk. You will see the same with climate crisis. Climate crisis will also translate into currency crisis. So the best way to protect emerging and frontier markets is to protect them from currency risk.
Question a little bit personal. Is it your first attendance for the Africa CEO Forum?
No, it's my second, but definitely not my last.
Okay. What do you expect for this kind of networking and about these huge events and meeting private sector and also the public sector in Abidjan, in Côte d'Ivoire?
Yeah, so what we've been expecting is what is happening.
Yes.
So networking, seeing everybody that's relevant in the private sector in Africa. Same what we expect in Togo in November. So all key decision makers in one place. And well, actually also a lot of fun.
A lot of fun too. And in terms of relation between a public sector, the governments, is it easier to reach and to work with them to tackle your challenge, or you are more focused on private sector?
This morning during the opening ceremony, the president gave a good example that relatively, let's say, in terms of public-private partnerships, not only Côte d'Ivoire but Africa still has a way to go, and I think that's only positive. I mean, there is lots of room for growth, hence for increased impact in the combination of public and private sectors. And ultimately, I mean, who cares whether you work for the public or the private sector? You work for one country, I mean, one human race and one planet. So who cares who pays your salary slip?
Yes. You know, in this edition, we try to also work to create the next generation of CEOs, the champions. What is for you a great leader? What is a great CEO? What is the skills and what we need to be a great CEO for the next generation in Africa?
That's not an easy one.
Yeah, I know.
Balanced. A great CEO needs to be balanced. He needs to be able to balance profits versus impact. He needs to be able to balance the relevance of his team, of his people, versus the relevance of not growing too high in costs. He needs to be able to balance the public goods that he might be using or misusing versus the goods entrusted to him to take care of it. So I think ultimately the right future CEO needs to be able to balance people, profit and planet.
So witness the answer, wow. Thank you.
On the spot.
Thank you for this time, thank you for this exchange. We go to conclude to this conversation. You are the CEO of TCX Investment Management Company, BV. What is too long? What is the title of the company? Investment Management Company, BV. BV is for what?
It's a Société Anonyme, so it's a legal setting. Yeah.
TCX is better.
Exactly.
Mr. BROUWER Ruurd. I'm right?
Perfect.
Perfect.
Yes.
You speak a little bit French also?
Oui, un peu.
Un peu. Bon, parfait. Merci en tout cas d'avoir été avec nous. Thank you to be here with us in this web TV of Africa CEO Forum. So we go for the next sequence, next panel, and keep with us with this hashtag ACF 2023. Thank you and see you soon.